Be aware of panic buying based on hopium. It's where the end of a trend just goes parabolic before we start seeing a big correction. And we're going to look at that today with the cryptocurrency Quant. We anticipated it will go down. It's made a big movement down, but we're going to do an updated analysis. But this applies to all markets and all time frames because we need to anticipate what's likely to happen so we know what direction to bet so we can maximize the amount of money that we make from the markets. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Quant. So with Quant, we're going to do a detailed analysis today. Breakdown, if you saw my video on the 10th of October, it's really been playing out in a textbook fashion. But what we've really had, what we want to pay attention to is this big move to the downside. And that's what we said in our YouTube video on the 10th of October. We are likely to see this downside movement, and we've had it quite nicely. And just so you know, I'm actually onboarding my new clients, my new students. And if you want to learn with me, work closer with me, get into my private community, I highly recommend to take my free 4 Secrets masterclass. It's really the gateway to learn from me, check out my courses and everything else. And if the 4 Secrets free masterclass resonates with you, you're going to love my teaching style because I'm going to show you what you really want to be looking at time and time again so you can see what the markets are likely to do so you know when to buy, when to sell, but also when to stand aside. So with Quant, by the way, that's in the description link below. With Quant, what we have, I'm looking at a weekly chart right now. What we have is something called a bearish divergence. It's basically when the price on a weekly chart has gone higher, but the momentum has made a lower low. We've got a bearish reversal, but the low from here to here is the lower. So that's called a bearish divergence, and that's a sign of weakness. So when we see that, we anticipate the market to move down, and we have had a reaction to the downside. Because what we're going to look at today is what's likely to occur. Is it that Quant is going to do some type of pullback here and then continue to the upside? Or are we going to see it make a new low? And we're going to talk about pattern reversal signals, and we're going to talk about wave fours, right? Pattern reversal signals and wave fours, and that will give you pretty much everything you need to know in regards to Quant, but how we can also apply that to other markets. So we're going to go back to a daily chart right now. And what we said on the October 10th video was Quant is making a very nice pattern. We've had this 5-wave move to the upside, ABC correction. Markets tend to move in 5s and 3s. And when it's identifiable and pretty clear, we can leverage that information. Then Quant started to make this 1, 2, 3, 4. At the time of the last video, it was around this region over here. And we said the minimum expectation is something called a wave C over here. And an overextension is over here. And at the beginning, I said, hopium, panic buying. You want to be on high alert from it. And that's what this is. It's called a 5th wave blow off in terms of it's just the market gets overheated. It's hopium. It's like, fingers crossed, I'm going to get rich tomorrow. And people start buying aggressively. But then there tends to be a big correction. And that's what we're going to look at today. And this is the typical maximum wave C. So what we're looking at is a potential A, B, C. So we've got 2 scenarios. And stick with me on this. This will make perfect sense. We don't know what the market's going to do, and there's no way of knowing. But what we do know is crowd psychology, and as the patterns unfold, what the crowd psychology is telling us. So I told you something about a pattern reversal signal. So what would give us a massive clue that Quant, I can get rid of these now. I can get rid of this and this. I can even get rid of this as well. This has served its purpose. And this has served its purpose as well. All right, what would tell us is the market going to do, because it's one of 2 scenarios, right? One of 2 scenarios is going to play out. It's either going to be that the market is making some type of correction here, and then we're going to see a continuation, or we're not going to get a continuation, and we're just going to get Quant making a new low below this low down here. What would be the big clue? So there's something called a pattern reversal signal. And the key one is this point over here. What we're calling a wave 1 or A. Now we're calling it a wave 1 or A because it hasn't been confirmed yet. But the closing price of this movement to the upside, this wave structure, this is really, really important and very significant because if Quant closes in this range, that gives us a massive clue that this whole sequence is in fact an A, B, C, and we're likely to see the price continue to a new low. Yeah, hopefully that makes sense. Really, really significant because that will give us valuable information on what's likely to happen next. However, the second thing I said we're going to talk about is wave fours. So the other scenario that could play out is that this is indeed a wave 3, and we are potentially going to make a wave 4 and then continue to a wave 5. Okay, this is a bit confusing. How can we how can we make money from this and we don't know what's going to happen? Well, it's the paradox of trading. It's double think. We have to be prepared for both scenarios, and we can make money in both scenarios because the beginnings of a wave 4 and the continuation to a new trend to the downside actually look the same. Is one of the reasons we use the term 1 or A, 2 or B, because at the time we just don't know. So we're going to break that down. And if you're really serious about making money, right, and you want to work closer with me, my community, my team, we've got a very, very strong team. I highly encourage you to check out my 4 Secrets masterclass. It's a real flavor. It's phenomenal information. It's free, but the reason I designed it and the reason it's free is so you can really test me out, test out my teachings. You've been following me for a while, watching my content. But if you like it, get the courses, join the community. We've got a massive discount going on right now. I'd love to work closer with you just to help you make money from the markets. So looking at this now, so what we're going to do is we're going to look at, I'm just going to clean this up a little bit. I'm just going to remove some lines. We'll keep the data, but we're trying to remove some lines. What I want to look at is a typical wave 4, right? So we've got this nice movement to the upside. We don't know at this point if this is a wave 3 or if it's a wave C. We just don't know, and there's no way of knowing at this present moment. Other than the fact we do have a weekly bearish momentum. This would indicate that it's more of a wave C. Why? Because when you get a bearish momentum like this, it indicates that we're going to see sideways to down for a number of weeks, right? That's a big clue. So I'm leaning on the side because of this reason on a wave C. But we want that pattern reversal signal to confirm it. When I say want, it's just if we get it, we know if the price goes below, the exact price is, where is it? It's around, let's just call it $129. If it closes below $129, we know we're probably going to see a continuation to the downside. But before then, the other things to keep into account is this could be a wave 4. Right? If it doesn't close into this range, it could be a wave 4. So we're just going to look at what does a wave 4 normally look like. Okay, so we've got this initial move down. And this is why we're going to call it a 1 or A. I'm actually going to copy and paste this. Copy and paste this. It's actually a 1 or A over 4. It's either an A over 4 or a 1 over new sequence. Stick with me in this. It will make sense. It will make sense. And then we're going to use this 2 or B up here. I'm just going to make it a bit smaller so it just stands out. And we're just going to put a question mark beside it. So more often than not, we'll get a third leg to the downside. As in we got the first leg, which is this. The first leg down. We got a correction up. And then we'll probably get another leg to the downside. I'm just going to quickly go to an hourly chart. Just wanted to double check something. Just give me 2 seconds. Just wanted to see the sequence of this. So this is quite nice. This is quite nice in the sense of this is a very clean ABC. That's what we want. ABC structure. That's pretty typical of a 2 or a B. You see that? A 3-wave structure, ABC. Remember I said markets moving 5s and 3s? Well, this looks like a 1, 2, 3, 4, 5 ABC. 5 over 1 or A and an ABC over 2 or B. By the way, if this is blowing your mind a little bit, one of the 4 secrets is pattern position, Elliott waves, 5s and 3s, crowd psychology. I'm telling you, it's a game changer because the way you see the markets will, what people say to me most commonly is the way people see the markets now is entirely different, mainly because they understand crowd psychology much better. So what we're likely to get is at least one more move to the downside. All right, so I'm just going to do a couple of projections for us. All right, I'm going to do some wave 4 analysis because we want to see what would be a typical wave 4. if I take the low to the high, most wave fours are a minimum of 38%, 38.2%, 50, and a maximum of 62%, right? And we can see that these three ratios are above this, right? So this down here would be what would void a wave four, it being a wave four, right? This will make sense. I'm doing it slowly because I want to get this across. Wave C's, I'm just going to measure this. I'm going to use the full range. In fact, I'm going to use closing data for this price analysis. You'll see why. It's more relevant. I'm just going to change. I'm just going to quickly update a couple of things. Just bear with me on this. I just want to get this here, and I just want to do this ratio again, but I want to do it on closing data. It just gets rid of the noise. This will make sense. All right. So more than likely, what we're going to see is at least another move to the downside, hitting the $150 level, right? And this is either going to be one of two things. It's either going to end up being a wave four and then a reversal, and we'll look at that more closely nearer the time. But I think what we're going to end up seeing is a continuation, a break of this point, and if we get that, then it's not a 1 or a 2 or B, it's a 1, 2, and then a 3 to the downside, and that will be a confirmation that, or the early signal, strong signal, that this top is in fact a wave C, and then we're going to get a continuation to the downside. So the key things to take away from today, there's really three factors, right? Three factors. First is momentum on the weekly, right? This is the trend. The trend is your friend. Ride it until its end, until it reaches its bend. So if we just look at the weekly momentum, right? Let's just look at this. I just want to show you this because this is practical. It's easy. It's simple. It's when this blue line went below the red over here, each bar represents 1 week. So it went sideways to down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, right? That was 3 months. All right. On the next one, when this went below the red, it went sideways to down for 1, 2, 3, 4, 4.5 weeks, for a month, right? A month. Now we've had this one over here, and it really coincided with this top over here. So we can anticipate, at least for the next 3, 4, 5 weeks, up to 12 weeks, that we're going to get some type of sideways to down movement, right? So that's a given, right? So sideways to down of the immediate 1, 2, 3 weeks. Really, really important. And then when we move back into the daily chart, we want to just cover, okay, we anticipate at least one more leg to the downside. This zone here, $150, we want to be on high alert because this will be a typical wave 4. However, if it breaks this and continues to the downside and goes below $129, $130, then that would strongly indicate that this top in quant, this is pure technicals, by the way, this is crowd psychology. This top over here is indeed early signals that it's going to be a wave C, and that we're probably going to get a continuation to the downside. So I'm going to make this really, really clear for you. It's either going to be an A, B, C of a wave 4. This is the lower probability outcome, but still a probability. But if we do break that $130 level, we're more than likely going to see something along the lines of this: 1, 2, 3, 4, 5. We're probably going to see the market move more like this. Hopefully that makes sense, right? But the key piece of information, depending on if you're trading quant, if you're buying and selling quant, if you're doing different things with quant, the main thing is right now we do not need to know. Both scenarios, quant drops down to $150, right? Both scenarios. So the very high probability is that quant's going to drop down to $150. If this doesn't hold, we're probably going to get continuation. If this holds and we get a reversal and the price goes back up, especially if it goes above this point, then it looks like bullish behavior. So we covered a lot today, a lot of detail today, but that's just the paradox of trading. And if you want to become one of my students, want to work closer with me, my community, attend my live workshops, be a part of my Telegram community as well, take my free 4 Secrets masterclass, check it out. It is my way of onboarding new students to say, look, this is what I teach. This is methodology. This is how we make money from the markets. There are courses available at a massive discount right now. Check it out because we cover, everything in depth. So you just get everything. And that will just take you to the next level. So if you found value of today, like, subscribe, hit the bell notification. Let me know what you think of quant. Do you think it's going to do an ABC correction and then trend reversal? Or do you think it's going to continue to the downside? Let's just finish with a quote from my book, which you can also download. The link is in the description below. It's free. I'm giving my book away for free. I know it's crazy, but hey, I believe in karma, right? I believe in karma. All right, here we go. Benjamin Franklin, chapter number 4. He said, he or she who is good for making excuses is seldom good for anything else. What I've realized online with courses, I've paid for many, many courses over the years, thousands, tens of thousands, over a decade's worth of courses and training. Some are fantastic, but most are not. And one of the reasons I created the masterclass, one of the reasons I created my own courses, to just really show you what I've learned over the last 15 years, but it's really the 20% of the information that's going to give you the 80% of the results. And that's what you want to focus on, is to get the edge in your favor and then trade and invest with that edge, so you just have a higher probability of making some really good money over time. Check out the masterclass, join my private community, and I'll see you very soon.